I've got three outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect.
When you're actually making a decision, an investment decision, you've got two things to decide. One thing is, what asset do I buy? And the second is, how do I custody the asset, or how do I avoid losing the asset? It's not enough just to buy the Bitcoin. You actually have to make sure that no counterparty steals, loses, or destroys your Bitcoin. So when you think about counterparty risk, your wealth can be impaired by the failure of any counterparty you're required to trust. And so there are three broad categories of counterparties everybody has to deal with. People, you're a counterparty, your family, your friends, trustees, people you trust, your lawyers, your accountants, your money managers.
We're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. It's very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumor sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026, when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got three outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front loaded, and in fact it's shorter but more violent in 2024. So those are the three scenarios that I'm juggling in my head with. But 60% probability is just does what it says on the tin and repeats what it usually does. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front running the ETH ETF. If the previous front running made money, they'll do it again. So retail will get very interested, and ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yield of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself, because then they can stake it and get yield. Because if you don't give them yield, some asset manager who launches the ETF is going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield, and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, here's a bet on technology. It's a broader based thing, and we get a yield, so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's two different things here.
If you simply invest the entire amount in Bitcoin, you're going to go from $1 million to $1 billion. it's 1,000x. You're going to double your money 10 times. And so you can see the difference between a mediocre strategy, a conventional strategy, and a winning strategy. So let me say it this way. $1 million invested for 100 years leaves your family with a real net worth. If you invested in the peso in ARS for 100 years, you will have 28 cents. 28 cents. If you invested in the US dollar, you'll have $700. You'll have $1 million in the S&P index of companies, and you'll have $1 billion if you invested in Bitcoin. And so that's the big idea. Bitcoin is economic armor, right? When you think about it, we talk about it. If you think long enough, it is economic armor. It will protect you from the economic wars to come. And there really isn't much else that will. Whatever you do, just make sure you don't lose the money, right? This is common sense. So when you're actually making a decision, an investment decision, you've got two things to decide. One thing is, what asset do I buy? And the second is, how do I custody the asset, or how do I avoid losing the asset? It's not enough just to buy the Bitcoin. You actually have to make sure that no counterparty steals, loses, or destroys your Bitcoin. So when you think about counterparty risk, your wealth can be impaired by the failure of any counterparty you're required to trust. And so there are three broad categories of counterparties everybody has to deal with. People, you're a counterparty, your family, your friends, trustees, people you trust, your lawyers, your accountants, your money managers, your employees, executives at a company you work at. They're all people, right? And you have to trust them. You also have to trust corporations. The issuer of the asset, the producer of the product, a trader, a developer, the custodian, the bank, the exchange, the network. If you own a stable coin, you're trusting the issuer of the stable coin, you're trusting the network the stable coin trades on, you're trusting the crypto exchange that holds the stable coin, and then you're buying a stable coin that represents probably the dollar, which is going to lose 99.9% of your money over 100 years. So it's a bad asset, in my opinion, over the long term, and you're going to have a bunch of counterparties, and you have to understand them all. So keep in mind that you're always trusting counterparties. They're either people, or they're corporations, or they're governments. You have a building, the district can rezone the building. The mayor can rezone the building and seize the building. The state, the province can seize the building. The government, is a counterparty. The federal agencies are counterparties. International agencies are counterparties. So when you're thinking about whatever you're owning, whether it's a building or a piece of art or a bar of gold or a stock or Bitcoin or a stable coin or a crypto asset of some sort, whatever it is you own, you only are going to get the return if none of these counterparties fail you. And so first thing to do is make sure you understand who your counterparties are. The next thing you got to do is manage your counterparty risk. Over a long enough timeline, every person, every corporation, every government will fail. So Bitcoin is fueled by chaos, and it's a very valuable thing. So I'll end with the point on the future, which is the near-term catalysts are going to be fair value accounting, the Bitcoin spot ETFs, and the halving. They're all coming. The world is going to reevaluate all these assets, and what you're going to see is they're going to demonetize the other assets and shift them into the Bitcoin asset class. And as they do it, when Bitcoin replaces gold, it should 30x from where it was. And when they replace all of the other assets, there's no reason why it can't 500x. This is just a matter of education. So, in summary, no country can stop inflation. The companies can't outgrow inflation. Workers can't outwork inflation. Few are going to beat the market by skill or luck, but everybody can buy Bitcoin.